Good morning, guys. Welcome to this Monday, November 10th. And I guess we have the start of the government reopening and process. Looks like they work over the weekend, and there are some Democrats who broke, and now we have at least the starting point for a reopening. So they're working on that. Yeah, that's why the market is rallying right now. Uh, it's a result of a government shutdown and inside. It's not done deal yet, obviously, but it's looks like they're going to be able to pull it off. So the market is in a good mood. Going into yesterday's Friday's Friday was a pretty crazy day, wasn't it? So I mean, I had to kind of look at this on the it's almost a capital flow chart we had to look at for this. But you saw this, we had this massive rally at the very end from having a, if I keep scrolling down, you'll see where far we went. We were down here at the 6650s, really in a bad spot here, going into the first half of Friday, and then we ended up in a nice little rally at the very end. And we can adjust these guys at the very end here. We have a couple of levels to lean against. I didn't even get down that far and looking at these level, but here they're very low here around the 6650s, and that's what ended up being the turning point. After the London closed, the whole thing started turning, and we ended up with a nice rally. They squeezed it up here, and they took out that 67.15 level, and then off to the races we went. So you get my capital flow chart over. And yeah, so here we are. So we were all the way down here at the 6650s. It looked like we were gonna have a terrible, terrible start of the or terrible end of the week, and they turned into a little rally. And they may have been, based on some rumors on potential government shutdown changes, but it could have certainly been that. A nice little rally at the very end. The strong close on Friday, gap up here on the Monday, given that they finally actually have give a few senators, which is going to which split ranks and voted to open. So we got a little rally going here this morning. Let's see how far they can take this one. They're still up here right at this area, the 6800. They had to kind of clear this area. And now they had to clear the 6852 before we start getting excited about this, but they're definitely on their way. So we're going to start off this one on the long side of the market. We don't have a lot of no news to drive the market today or tomorrow. We get a little bit maybe Wednesday. We have CPI, PPI Thursday, Friday. We'll see if we get those. Maybe we probably get those because they made an effort to get those out last time. So CPI Thursday and PPI on Friday. So we have a couple of weeks in Thanksgiving, and I would probably guess that the Thanksgiving travel, Thanksgiving and travel would have been a massive disaster if the government had been shut down with what's going on this weekend in terms of flight delays and cancellations. Good news. We are hopefully it's going to open up this week. It's procedural stuff to get through, and the market is liking it. So starting off on the long side of the market, looking to buy weakness, at least to get started, and let's see if this rally gets legs or if it's going to be something shooting it down. But starting off on the long side, looking to buy against 6805s, 6795s, rotations back up, 6785, 6770. So a gap up here. And I mean, we could certainly see an early weakness here, running it down, testing these support areas. I mean, I would look for those opportunities to get long for rotations up, or look for long opportunities, I should say. When you get down here below that 6800s, all the way down to that volume edge at the 6775s, it's like a 25-point range you have to worry about. It's resistance. Looks like they blew through that in the overnight. It's going to be support on the way down as they test this. If they do, we'll see how the whole thing shakes out. But starting off on the long side of the market to get started, given that we have news driving this, there's no reason not to. I would not be super aggressive on the short side just yet. We are in that territory where the resistance could hold anyway on the way up here. So if investors are taking out that 6840s, a couple of levels higher, I would be a little bit more inclined to lean in on the or look for a potential short trade, I should say. Um, Leaning in on the long side after they take out the 40 to 50s here, it's definitely an option. You know, if they start taking out these areas of resistance and they start keep going, you'll definitely stay on the long side at that point. But these two probably could give you some decent resistance. So 68, 35s, 45s, and 55s. These three resistance areas. I would look for short setups, but not super aggressively. But these are the ones. But I think if they're going to stall the market, it's probably going to stall it there. So on one of these three. So I would look for short setups against those, but not very aggressively. I would prefer the long side of the market, and we'll see if they can make a real go out of this and take this higher. So pretty good start of the week, I think. Let's see if we can keep this going and nothing else ends up derailing it. So looking to buy weakness, 68.05, 67.95, 67.80s, 67.70s for rotations back up again. They start trading below that 67.70s. We are back in this lower range again. And I would just take off the long bias at that point. That would be below the session lows, yes, the 67.70. If that comes out, I would just take off the long bias and go back range bound and see then what the heck is going on with the market at that point. All right, so that's the ES to get started. Looking at the NASDAQ and the bonds. Bond market, it gapped down a little bit. Okay, it's a little bit of that flight to safety gone, but it gapped up a little bit, it gapped down a little bit. So price is down. Yields up a little bit, not necessarily the would be maybe a flight to safety on this little run up. Maybe it's like a risk off kind of move, just selling the bonds to rotate into stocks in the overnight. But I would start off range bound as long as I hold that 116.10s. I would stay range bound, looking to buy against that support area. Looking to get short against the 1625s, 1630s, 117s for rotations back down. And I would say about 117, just going to stay on the about 117. Maybe start looking for a long setup for a good width type of trade. See if they can run it up, test these upper areas. But it's pretty much starting off range bound. We'll see if they take out that 1610. That would be I would be on the short side of that. If they take it out, then try to get on a short trade on that point. But it's anyone's guess if they're going to retrace this a little bit or just stay in the range. But primarily, I would say primarily range-bound bonds. I would look to buy against that 1610s. Looking to sell against the 25s, the 29 to 30s, and the 117s for rotations back down again. And that's the range I'm starting with here. If anything, I would favor the short try to get started to see if they can retest that low and potentially take it lower. But as I said, primarily range bound on the bonds. Doesn't look like it's doing any crazy stuff. It doesn't look like anything obvious there. And NASDAQ, that's the one which potentially can have some explosive action going today. They got hammered pretty good. So some of the stocks got absolutely creamed. And did I just miss putting in a couple of levels there? I did. Look at that. That's an edge to pay attention to right there. And I'm going to do that little edge right there. Right, there we have it. Right there. Okay. The two small edges right there. And starting off the same as the ES. We're going to buy weakness. At this point, 25 500s. 450s, 410s, down to the 360s. Now below 360s, I would probably take off the long bias and go back range band. That's a nice volume edge right there. And if that comes out, I think they can certainly retrace this quite a bit right down here into the support. So these three support areas probably weaker. I would lean against that the 350 edge primarily. So below that one, I'll take off the long bias. So I'm going to buy a weakness against that 25,500s, the 450s, 410s, and the 360s rotations up. And on the way up, anything below that one, I'll just go back range. But I'm still looking potentially to buy against these lower areas, but not as aggressively. And it could certainly take us right back into that lower area if it keeps getting lower. It's going to put an edge right there as well. It's a small little edge to pay attention to right there. So that's NASDAQ for you. Volatile, but if you look at capital flow, just to give you perspective on that guy, because that's kind of what you have to do on that. It is too volatile, that market. But on the capital flow chart of things, we keep taking out this here. It's at 350, 360 volume edge, right? If that comes out, you see NASDAQ how they were way down here. They retraced that whole thing on Friday, and then popped a little bit above this resistance area, the 360s, and now we're halfway up into this little congestion spot in the middle of the this main low volume area. So we've been, remember, we closed the gap, we closed the single prints, and then we traded back and forth a bit until we really start taking this lower. Now we're right back up in this range again. So as long as they hold above that 360s, we're in a good shot to potentially retrace. They kind of had to clear that 530 hurdle too. At this kind of resistance right now, and that is going to hold this until we see a little bit of a pop to the upside. So we'll see how this whole thing kind of comes together, but definitely stay on the long side on NASDAQ and see how far they can take it. And on the way up, okay, there may be short opportunities, but I think the primary ones are going to be up here, these three areas. So it's going to be against the 560s, 620s, and the 680s. So these three resistance areas, if all of them come out and start trading above it, I think we are on our way at that point. But I would look for short setups against this level, but not super aggressively. We are pointed higher, I think, to get started, and so trade from. I would favor the long side to get started. But these are the ones which, if they're going to hold, they're going to hold, and that would be consistent with this whole area right there in the middle. So this area comes out. That's when you start seeing. That's when you start seeing this really move to the upside. So we'll see how strong this is going to get. And then finally, oil and gold. Let's see, oil and gold. Interesting that gold popped pretty good. Look at gold, that's absolutely on fire. Popped pretty good on the upside. So here you have gold. So F2 pops, takes out the resistance areas here, that 4,000 upper levels, the 26s, the 37s, the 47s all came out early on in the overnight, took off like a rocket to the upside. Has not quite installed here a little bit at the 4,085s, but they're on the way higher. So I would stay on the long side on gold. Kind of surprising that the government shuts down, gold rallies. I'm not quite sure I get the dynamic there, but it's trading higher. So I would stay on the long side on gold. Look to buy weakness against that 95s, the 85s, down to the 75s for rotations back up. And I think if it starts trading below the 75s, the London low, you're probably going to see a retracement trade in there. So it could be a nice short trade setting up there. But I would initially look to buy against these early support areas and see how far they can take it. On the way up, I'm not sure we have a lot to lean against there right now. It's gold on the way up. It's looking at capital flow. They're heading up to this attractor at the 4130s. So you can see here, we were down here in this area. Nice move out of the middle to the upside on gold. Took out this whole area of resistance, way on our way right up to this resistance area. So chances are you're going to bounce there and stall for a second, 4130s, 27 to 30s. And that could be a nice short trade. That's just the first time to the level. First time to a high volume area, they tend to bounce it, but you had to be nimble at the time. And if it doesn't set up right, don't do it. It's the second and third time you don't get those bounces. If it runs into that the first time, you can look for that potential little retracement. So we'll see if they stall there or they keep going. But a nice move up on gold. Not quite sure what the dynamic is there for gold to trade higher like it is, but it is. So we're going to stay on the long side. Now, oil also range bound, and no big reaction one way or the other. So look to buy weakness on oil, 3 levels down, 59.75, 59.50s, 59.25s. Look to sell strength. You have an area in the middle here, which is kind of weak, but I would wait for the 60.40s, 60.80s, up to that 61s for rotations back down. So that's our area. Look to buy down to that 59.25. Look to sell strength up to the 61s, and pretty much expect the range bound trading day on oil. I could certainly change, but that's how we get started, and then we'll see how they're going to shape up from there. All right, so gold, look at that gold fire. It's getting volatile again. So if you want to trade it, you have to be nimble and really pay attention to what the edges are or intraday edges. Alrighty, guys, back to the ES, and come on, there you are. All right, back to the ES, and so everything kind of holding where we left it. So we'll see how this whole thing shakes out, but starting off on the long side on ES and NASDAQ, given the news and the potential government shutdown, there'll be of a rally based on that, and let's see how far they can take it. Alrighty, guys, we leave it there, and I'll see you back at 11:30 for the next update. So good trading. Probably going to be another week without a lot of financial news until everything gets opened up, and then we'll start seeing some stuff coming out again. All right, good trading, guys, and I'll see you back at 11:30.